It's almost 1 p.m. in Sydney. Welcome to Bloomberg Markets Asia. I'm Paul Allen. Here are the top stories. Asian currencies slumped to their weakest since 2022 on the prospect that U.S. interest rates may stay higher for longer. Meanwhile, Asian equities and U.S. futures slide after big tech is hit by Micron's outlook falling short of lofty expectations. And from lengthy registration processes to taxes, we look at the red tape that foreign investors face when trying to invest in Indian bonds. For now, though, let's check in on how markets are faring. Avril Hong's in Singapore with a closer look. Avril.
Yeah, Paul, it's bleeding that we're seeing pretty much across the board in this part of the world. If we can take a look at this dashboard that will show you how stocks are getting hit. I mean, earlier in the week, we thought we got through the NVIDIA correction, but then Micron missing on its sales forecast, missing those lofty expectations, really hitting the chip stocks in this part of the world today. And those are the drags on the benchmarks. But it is also a story of the currencies, and this is amid the higher U.S. yields overnight, the resurgence in the dollar, although you're seeing a bit of a pullback now. And we actually saw earlier today the Bloomberg Asia dollar index actually hitting the lowest level since November 2022. And that is also playing out, I think, on the currency, the Chinese yuan, after we saw yet another weak yuan fix. And this is for the longest streak in about a year. So you get the sense here that authorities might be trying to orchestrate controlled devaluation. Taking a look as well at the Japanese yen, which is recovering from the 168.7 level that it hit earlier. And this is now, even though stabilizing, well past the levels which drew intervention from Japanese authorities in April. So that's something that we're keeping an eye on. Let's flip the board and take a look as well at what we're seeing among some of the bond moves, because that is really at the heart of this all, the move in cross assets, because that dashing of the hopes, I think, of global disinflation, no thanks to the hot Australia CPI print earlier in the week, coming hot on the heels of Canada showing an inflation surge. The bond selling continues, and we're seeing higher yields among the G10s, but also something worth noting here is how Asia's companies and governments, the amount of bond sales this week has hit the highest in 9 months. So it looks like they're trying to lock in some of these historically tight spreads before they climb further. Flip the board again as we take a closer look at what we're seeing on dollar yen. As we keep an eye on those levels, we are actually keeping a close watch as well on those 1 week risk reversals. And it seems to suggest from options trading that they don't think we're going to see that rebound in the yen. They're not favoring the yen as much versus the dollar compared to what we saw back in April, Paul.
All right, thanks very much, Avril. Let's discuss Asia FX strategy and other things as well with our guest, Eugenia Victorino, Head of Asia Strategy at SEB. And Eugenia, I want to start off on the yen there. As Avril just mentioned, expectations around intervention aren't quite so high this time around. But with the yen at levels that we haven't seen since 1986, we're past the point where we saw intervention last time. Is there a credibility issue here for the Ministry of Finance if it doesn't do something?
Well, at this point, there's really no point in doing anything right before the core PCE is released in the U.S. because for an intervention to have an impact of around 4 to 5%, it actually needs to be done at the same time that the U.S. yields are actually going down. But if the U.S. yields are going up, then it would just be throwing away a lot of money and not even getting it down by around 2 to 3%. So from here until tomorrow night on Friday session, then the MOF, the only thing that they can really do at this time is to job on the currency.
Yes, you're not alone in that view that intervention on Friday or before seems pretty unlikely. And I want to talk about the US side of things in a moment as well. But in terms of Japan, in terms of the inflation story there, Do you have a sense that maybe it is starting to gain traction? And what does this mean for the outlook around tightening from the BOJ? Because eventually it will tighten and eventually the Fed will ease.
Well, indeed. So at this point, the inflation pressures seem to be sufficient, but we're still going to be looking at the Tokyo CPI in the incoming Tankan survey, because that has to show that there is sufficient inflation pressure in the coming months. It's not enough that it's just right now. Having said that, the composition of the inflation is actually quite positive, because you still have around 70% of the CPI basket that is contributing to positive growth in prices.
Eugenia, I want to put the question of the day to you as well, because it's not just the yen that's suffering, it's a lot of Asian currencies and the yuan also. So what matters more to you, weakness in the yuan or the yen?
Well, at this point, the weakness in yuan is very controlled, and that is really following the direction from the dollar. Meanwhile, if there is a big turn in the yen, that would have an impact on the dollar index, which would then have an impact on Asia currency. So in short, I would be looking more at the yen rather than the yuan.
Well, as you mentioned a bit earlier, there's probably not going to be any change to this dynamic until the Fed eases, but we don't know when that's going to be, because we've seen sticky inflation in developed markets. Here in Australia, we had a hot CPI print. We had one in Canada as well, and we've got the Fed's preferred inflation gauge coming up on Friday. What's the fate of these currencies if we get a hotter print than expected there?
Well, as far as the Australian CPI outlook is concerned, we still need to wait for the June numbers to be sure that there really is a continued uptick in the non-tradables inflation. Having said that, we may have a quarter of higher than expected inflation, but that does not necessarily mean that that's the end of the disinflation story. Of course, the pricing of rate cut expectations on RBA has now turned into a hike, and that's already priced in. Now, we need to see more of a pricing in the RBA to really push up Aussie dollar from here. And that is why I actually prefer other crosses with the Aussie, as for example, the Antipodian policy divergence play, looking at the Aussie Kiwi. But again, we're looking at attractive levels to enter the longs.
Yeah, it does seem to be a bull case in place for the Aussie, but I want to pick up on that point that I made a moment ago. We do get the Fed's preferred inflation gauge on Friday. If we get a sticky number there, like we saw in Australia, like we've seen in Canada, what next? That could really upend currency markets even more.
Well, that's definitely the risk. But right now, the market is expecting that the core PCE would take its cue from the US CPI and the PPI prints. And those prints have actually surprised to the downside. And looking at the inputs in the core PCE, it is very likely that it will go down. But the market has already priced that in. So it's very difficult to see the market pricing in even more cuts than they already do, because right now the market is pricing in around 70% of a cut by September and another later on this year. And the Fed is only guiding only one cut.
I want to circle back to China if we can, because we're seeing another down day for equities there. We've talked about the weak yuan also, but you say the market's too negative on China. Can you give us some reasons for optimism? Where are you looking at putting money to work there?
Well, the market has been too negative on China, even though the surprise index in China has actually turned since Q4 last year. Having said that, if you're still so focused on the property sector, as most market participants are, then it's very difficult to really be optimistic on China. But looking at investments, there's really definite improvement in the momentum from there. But if you don't have a strong recovery in the consumer confidence, then that's just going to have a stabilization of the growth outlook. But that stabilization is already enough to reach Beijing's target of around 5% for this year.
Big day tomorrow, of course. We've got Indian bonds being added to the JP Morgan Emerging Market Bond Index. We've already seen a pickup in inflows, but what do you anticipate in a further increase in interest around here?
Well, as you said, there's already been a lot of positioning in anticipation of the bond inclusion. So since the announcement in September, we've seen an additional $15 billion of foreign bond flows going into the Indian market. Of course, not all of that is going into the index or the bonds that are included in the index, but that's already telling you the appetite of the market for Indian bonds. Having said that, we're really just looking at the gains from the bonds because the INR has basically been pegged for quite a while, and the volatility, the realized volatility in the INR is so low that it's actually still a very attractive carry play on top of the gains in the bonds.
Yeah, the rupee very weak at the moment. Where do you see it heading from here?
Well, weak at above 83.5, but then it's not really moving beyond that. So I would expect that if the dollar were to turn towards the end of this year, then that could also mean that the rupee is not going to appreciate as much. I don't think the RBI is that eager to see the rupee appreciate from here as much as they are not eager to see the rupee depreciate too much from here.
All right, Eugenia Victorino, we'll have to leave it there. Thanks so much for joining us. Eugenia is head of Asia Strategy at SEB. And we've got an important interview coming up later on Bloomberg Television. US Ambassador to China, Nicholas Burns, is going to be joining us live from our studio in Shanghai. We're going to be talking about tensions in the South China Sea, the Russian defense pact with North Korea, and of course, trade and tariffs. That conversation happening at 2:15 p.m. Hong Kong time. Still to come this hour, though, we're going to zoom in on India's debt markets ahead of that sovereign bonds debut on a key global gauge. Aditi Mittal of India Bonds is going to join us later this hour. This is Bloomberg. All right, let's take a look at the Asia stocks benchmarks around the region. Pretty much a down day everywhere. The Hang Seng feeling the worst of it, off about 1.9% at the moment. Aussie stocks, meanwhile, down for a second straight day off the back of that much hotter than expected CPI prints rate hike from the Reserve Bank of Australia, looking like an increasing possibility going forward. Of course, a lot of the story today about currencies as well. Got a yen hovering around lows we haven't seen since 1986. The yuan also weaker, breaching the 730 level. Let's take a look at how Asian chip makers are doing as well after Micron slumped in late trade in New York. The US company's forecast disappointed investors. They had some pretty lofty expectations when it came to sales, and Micron fell somewhat short in terms of its commentary. Let's get some more from our tech reporter, Annabelle Drulers. So, Annabelle, Micron shares hit a record high earlier this month. Is it a case of going a bit too far, too fast?
Yeah, well, that was the really big question going into the numbers, Paul, because, as you said, we've seen such a big run-up in the shares so far this year, north of 60% gains. And that's just a lot of it really come in the past couple of months. So, yes, when you've got such great expectations, when investors really want to see not just earnings growth or proof of earnings growth, when they also want to know that that outlook for future demand is solid, it really comes down to what sort of forecast came out from the company. And this sort of missed the mark of sorts. You think about the average analyst estimate going in for sales for the fourth quarter, it was $7.6 billion. That itself was nearly an 80% jump on the year. So that's, again, just points to those lofty expectations. What Micron delivered was a range of 7.4 to 7.8. So you're still in that 7.6 there, but still there were projections for sales of north of $8 billion. And that seems to be really what's disappointing investors here. That's what was really reflected in the after-hours move. Big question, of course, does that drop of around 8% also trend into the session in Wall Street today?
Want to talk a little bit about Amazon as well, of course, joining that $2 trillion club. It's a rough ride getting there, though, and as we've seen with NVIDIA, market attitudes towards AI can shift kind of rapidly. How long is it going to keep that $2 trillion valuation?
Yeah, well, of course, if you take NVIDIA as a guide, it might not be too long, Paul, but still, the moves are really worth noting. As you said, the stock has really been whipsawed over the past couple of months. We saw some record highs around April, had a bit of a drop-off in May, a recovery from June onward, and it has been around those expectations or that focus on AI. As you said, not many have reached the mark. You've got Alphabet that only reached it in April of this year. There's, of course, NVIDIA, Microsoft and Apple, but you're talking more about $3 trillion then. What's really driving it, though, for Amazon is a couple of different factors. Firstly, its cloud business, it is its most profitable arm, has been extremely profitable as you've seen more companies that are shifting their focus to more spending on tech projects. AI projects, a big beneficiary of that. So AWS, a big winner there. And what else we've seen is some job cuts, further cost reduction from Amazon. They say that they've enhanced their warehouse, for instance. All of those have been positive, especially when you look at the e-commerce division in particular that's really trying to fight off those Chinese incumbents, the likes of Shein and then, of course, Temu, which is owned by PDD.
Yeah, what's the plan there for defending its old school e-commerce business?
This is really interesting, Paul. I think it's worth noting just what the rise of the likes of Shein and Temu has been and what's sort of underpinned it. And it is a different operating model to what Alibaba, or Amazon rather, has followed in the past. So Temu and Shein, they both use what's called direct-to-consumer. So they're essentially connecting factories directly to the end consumer. You're taking out the middleman. In the case of what happens on Amazon, typically it's more of an instance where a business sets up a page or a storefront on Amazon, then they buy goods from the factories and they sell them onto the consumers. So they take a bit of a premium. What Shein and Temu does is remove that process. They can offer lower prices to consumers, and because of that, they've been able to gain that greater market share. Now, Amazon is also saying they're going to do the same. They're going to announce, they've just announced this new business division. It's still going to be part of Amazon's site or hosted on it. It could be kicking off as early as next week. Big question, of course, what sort of demand there is, but already we've seen them sort of pivoting or really paying attention to what the likes of Shein is doing, for instance, because early this year they cut the price or that sellers had to pay that selling fee for clothing that was lower than $20 an item. So again, it's just that focus on trying to fend off the competition.
All right, Annabelle Druller's there in Hong Kong. Let's stay with e-commerce, and Alibaba's sponsorship of the European Football Championship could see it scoring some goals of its own. Bloomberg Intelligence senior analyst Catherine Lim joins us now. So, Catherine, has Alibaba been able to capitalise on its sponsorship with UEFA Euro 2024?
Well, we've been tracking the download numbers and things are looking good. We've actually seen the download numbers on a year-on-year basis increasing and escalating to a high as of June 17. So, I'm keeping my fingers crossed, and I do think that we might actually reach new peaks again as we go into, the quarterfinals and then into the finals. So what essentially this means is that there are now more users with AliExpress on their mobiles. And the real test is whether Alibaba is able to really retain these new users and get them to actually spend more on their platform.
So is this going to have a positive impact on Alibaba's financials in the coming quarter?
Well, we know the kind of money that goes into sponsorships, throwing out, the discounts, the freebies when every goal is scored during these matches. It's going to cost Alibaba's money, and its International Digital Commerce Unit, AIDC in particular, which is already in losses, will probably see that deficit widening in this current quarter. The company has talked about it. I don't think it's going to come as a surprise to the market. Really, I think all eyes are going to be how big that gap is going to be.
So are we going to see the same level of publicity across Alibaba's apps at the next big sports events? It's, of course, Paris 2024, the Olympics.
Well, maybe that's going to be a little bit of good news for some, that Alibaba's going to lift their foot off the pedal for the Paris 2024. And, it's going to shift gear a little towards Alibaba Cloud, and that's the unit that's going to be driving some of the technologies behind the broadcasting, for instance, for the Paris Olympics. The good news is that, we're not going to actually see a lot of that incremental spending, but likewise, you're not going to see the company in a position to really monetize the Paris Olympics sponsorship. Some of the other companies like Tencent, Kuaishou, which actually has the on-demand videos rights, they may be in a better position to monetize on the Paris Olympics than Alibaba.
All right, Bloomberg Intelligence senior analyst Catherine Lim there. Plenty more to come. This is Bloomberg. Right, let's take a look at some of the Southeast Asian benchmarks at the moment. A little bit of a better story compared to what we've seen in China, here in Australia, elsewhere. We've got Singapore and Indonesia both in positive territory. Manila's one to watch today. We're better by 0.25% on the main index there. We do, of course, have a Philippines central bank rate decision. We're expecting no change there, staying at a 17-year high at 6.5%. That'd be six meetings in a row. But we've got inflation seeming to come under control in the Philippines, hovering close to the top end of the 2 to 4% target band. The sense is that maybe might see some easing in August, but for today, no change expected. Here are some of the top corporate stories that we're following. A Boeing whistleblower alleges that he was retaliated against after raising concerns about a subcontractor's work. The mechanic who worked on the 787 Dreamliner claimed to have observed substandard manufacturing practices. He says he was fired after reporting the issues internally. The FAA has seen Boeing's whistleblower reports surge since January's mid-air blowout aboard an Alaska Airlines 737. Hong Kong's landmark mall is to get a $1 billion upgrade with the help of Hermès, Louis Vuitton and other luxury brands. The plan includes new restaurants and a multi-story stores for 10 more tenants. This is a vote of confidence in the city's luxury retail sector, which is facing growing competition from other destinations, including Japan, Macau, and China's tax-free Hainan Island. New World Development is selling a 30% stake in a Shenzhen building to a Chow Tai Fook subsidiary for about $200 million. In an exchange filing, the builder says it considers the building a non-core investment. It expects to book a profit of about $14 million from the sale, improving its liquidity position. Let's take a look at travel stocks in China. We're seeing tourism-related stocks doing okay, actually, after China extends a visa extension to more countries, among them Australia, New Zealand and Poland. Li Qiang, the Chinese premier, made that announcement while in Australia and New Zealand recently. That means travellers can enter China without a visa for up to 15 days. Elsewhere, we've got some movement in property stocks as well. China's capital city, Beijing, easing requirements for down payments and mortgages. So that's joining a few other countries' megacities in terms of supporting the real estate sector. Down payment requirements down by 10 percentage points to a minimum of 20% for first home buyers. The yen story at the moment, though, that's super weak, although it's got a little bit better, 160.41 at the moment. Plenty more to come. This is Bloomberg.
Economies go in cycles. It could have, sharp turns as well.
That is creating a lot of excess capacity here. Then it's going to have to be exported to the rest of the world, which is precisely where the concerns of the rest of the world come in.
When Janet Yellen comes to China and say, lecturing Chinese about the overcapacity, she's a great economist, but she took a very myopic, narrow view. Now, for energy transition in general and the EV in particular, China is arguably the most efficient, the lowest cost producer, right? So actually it's good to have open markets, not only Chinese EV to produce, to serve Chinese customers, but also serve European, North American, and customers around the world.
I think the whole world needs China in terms of economic impetus.
Some of our guests from the World Economic Forum in Dalian this week discussing China's economic outlook. Let's get a closer look now at China markets. A bit of red on the screen. Avril, what are you watching?
Quite a fair bit of red, you're right, Paul. We are seeing the mainland market, CSI 300, just about entering the lunch break with those declines of about 0.4%, almost 2% off on the Hang Seng. The concerns about the Chinese economy, as you just heard from some of our Bloomberg guests, are really front and center. And today we got industrial profits, numbers coming out from China, uninspiring, even Beijing relaxing those home buying restrictions, not helping to move the needle. Of course, this is happening on a day where Asia stocks in general also declining. Interesting as well how we keep a watch on dollar China. This is feeding in from what we're seeing on the weakness on the Japanese currency, not just on the greenback. Offshore yuan popped above 730 earlier, recovering some lost ground now. We are also seeing today the PBOC coming through with yet another weak yuan fix. This is for the longest period of time in about a year. So it looks like a controlled devaluation that they're trying to orchestrate, especially ahead of some of these risks later in the year. This week we have the PCE numbers. We are of course watching out for the US election as well, what that might mean for tariffs. Let's flip the board because, as I say, it's also related to what we're seeing in the Japanese yen, and just recapping the levels that we saw overnight. In a span of about 12 hours, we saw dollar yen going past 160, hitting 168.7, stabilizing a bit in the Asia trading session. We got some of these Japanese retail sales numbers coming in stronger than expected, but let's not forget how the Japanese rates are just not high enough, the ones in the US not low enough. So until the Fed eases, this weakness in the yen is just the reality that we're coming to terms with. Flip the board again, because as the yuan and the yen weaken, they have been putting pressure on Asia FX as well, in spite and on top, I guess, of the greenback strength. So we're seeing these central banks in Asia really on guard to the fluctuations in their currencies. The likes of India, Indonesia, Vietnam, they've had to step in recently. Today, we're also seeing the peso in focus. Yesterday, it closed at roughly almost the weakest level on record. And today, BSP, Banco Central, is expected to keep things unchanged, but we're watching out for the signals of, whether they're willing to ease ahead of the Fed, something that they have voiced previously, a bit of willingness to do. Paul.
All right, thanks very much, Avril. Just want to get across some breaking news regarding SpaceX, a tender offer valuing the company at $210 billion. Of course, SpaceX are tremendously successful in terms of pioneering rocket reusability. The company also got a contract today worth $843 million to bring down the International Space Station when it eventually retires. That's expected to happen in the year 2030 thereabouts. So SpaceX is going to be selling insider shares at $112 a piece in that tender offer. That's a higher than expected price and does boost the value of SpaceX, as I mentioned, according to up to $210 billion. This information, according to people familiar with the matter. All right, let's get back to that FX story because it really is dominating the agenda today. We're joined by Bloomberg MLive strategist now, Mark Cranfield. And Mark, hard to know where to start in terms of the weakness. Is it the yen? Is it the yuan? I guess that's our question of the day today. Which one of these is more important in terms of weakness?
Yeah, it's hard to choose in many ways. They're both extremely significant, especially in this part of the world. Everybody in Asia is watching to see where those two currencies go more than any other. But of course, if you look on the flip side, it's about dollar strength. It's about this prolonged and in some ways unexpected US dollar strength. So at the beginning of the year, quite a few people were looking for the Federal Reserve to begin lowering interest rates, maybe even in the first quarter. Certainly by this time, people were fully expecting the Fed to have lowered rates at least once. And that was expected to weaken the US dollar and to help currencies like the yen and the yuan and many other emerging market currencies as well. Of course, that hasn't happened. And even the Fed has recognized the fact that the inflation has been stronger than they expected, and they've changed their outlook, maybe to one interest rate cut later this year. And that is giving the US dollar a second burst of energy as we come towards the middle of the year. And that is the problem that everybody is having to deal with, the fact that the US dollar has stayed stronger for longer and looks as though it's going to go into the third quarter with quite a head of steam, which is going to upset Japanese policymakers, China, and many other countries as well. Everybody has to learn how to cope with a very strong US dollar.
Yeah, it's added, I guess, an extra level of importance as well to this PCE read we're going to get on Friday. This is the Fed's preferred inflation gauge. What are our expectations here, and what happens if that print is hotter than we thought?
Well, whatever our expectations are, we've seen this week with the Australian inflation, numbers are tending to come out on the higher side. So people, I think, are readjusting. You can see partly in the bond markets at the moment, even though US equities are having a weak couple of days, it's red across the board pretty much in Asia, and yet US treasuries are not finding a haven bid. That tells you a lot about expectations going into this PCE number. Bond markets have suddenly become very defensive. They are not prepared to take up the slack, even with the currency markets having a lot of volatility and equity markets looking a bit heavy going into the end of the first half. So if there's no haven bid in bond markets now, if we get a slightly higher than expected PCE number, there certainly won't be any next week when we have French elections over the weekend as well. So we are looking at potentially a very volatile period next week in bond markets, which will again upset what's happening in equities as well. So it's almost becoming like a vicious cycle where weakness in one debt market leads across asset classes, ends up in equities, and probably spills over to the foreign exchange market. There's no easy end in sight until inflation numbers start to come down on a regular basis.
All right, MLive strategist Mark Cranfield there. Still to come, India is in focus. Sovereign bonds, of course, debuting on a key global gauge on Friday. Aditi Mittal of India Bonds is going to join us later this hour. This is Bloomberg. Welcome back to Bloomberg Markets Asia. You are watching the India Focus, and we're just about 6 minutes away from the open in India. Looks like we're setting up for a modestly positive start, which would be something of a relief after what we've seen around the rest of Asia. India, for now, seemingly immune to that ripple effect around the world that Mark Cranfield was talking about a moment ago. Of course, we had a hotter than expected Aussie CPI print that caused a spike in bond yields here, and then very, very weak yen dominating the agenda as well. There is some suggestion that we might see some US treasuries selling off if Japan needs to find some extra funds to cover a potential yen defense. The suspicion is, though, we may not see that until, well, possibly next week. But in terms of India, it is, of course, an important week as well. Friday, the key day here. That is the day that Indian bonds are included on the sovereign bond index run by JP Morgan. So we've already seen some fairly substantial inflows, quite a bit of interest in that development as well. So that bond inclusion happening on Friday. Just a little bit of breaking news out of India as well. India Cements has 60.2 million shares changing hands in a bunch trade. So India Cements potentially one to watch there as well. All right, so 4 minutes, 40 seconds away from the open there in India. All right, let's discuss the bond situation a little bit more. Aditi Mittal, co-founder and director of India Bonds, and a fintech bond investment platform, IndiaBonds.com, co-founder, joins us now. So, Aditi, thanks so much for joining us. I just want to get your views right off the bat. How does this inclusion of India Bonds in JP Morgan's emerging market bond index, how's that going to change credit markets in your view?
Good morning, Paul, and to all the viewers. It's a very happy morning for us because tomorrow India gets included in the JP Morgan EM index. It's a watershed moment for our country and a big milestone which India has been waiting to achieve. So tomorrow we're going to see that we get included, and this we anticipate will involve about $25 to $30 billion of investment coming into the bond market. This is going to be a big milestone because this will give exposure to the Indian GSEC market to the global investors in a fully accessible route. Do we expect any fireworks or anything dramatic happening in the next 1 week? My answer to that would be no. Because this announcement came sometimes in September 2023. And as you also had mentioned, that people have been preparing for this. So we've been seeing that approximately $10 billion have already come into investment, and the rest is to follow. If we look at the composition of the index, India is going to be the second largest EM country into this index. 1% investment is going to happen on a monthly basis. So approximately we will take about 10 months to be completing this investment. And then we will be followed by inclusion in the Bloomberg index. So it's happy days and happy times for our country.
Yeah, as you say, this has been signalled for quite a while. We've seen a fair few inflows ahead of this happening as well. But to your point, how long do you think the market can sustain the interest of global bond investors?
So let me put it this way. There are about 27 securities which are par qualified. And since September 2023, I'm going to say, that we've been seeing the interest coming into 0 to 5 year bracket. But in off late, we've been seeing that there has been a duration play and people have been investing into the long duration. Is it a phenomenon of today or for next 6 months? I think putting a time period to it is not going to be fair, because we are expecting that after JP Morgan, then the Bloomberg index inclusion will happen, and post that there will be a more confidence from the global investors once they have seen and experienced India, that they will come down the credit curve. So I think that this is going to have a rippling effect over years, and I'm not even going to say months.
So what's your outlook for rupee corporate bonds? Can you see issuance rising this year? And if so, why?
So corporate bonds, I would say the domestic need is also quite high. So we have seen the record issuance number in the last financial year 23-24, and there has been a robust issuance starting this year financial year as well. Corporate bond has been dominated by the domestic investors, but in times to come, you will see international portfolio investors also investing in corporate bonds. But it will first start with the GSECs, which is what has already started with. We've already seen about $10 billion coming in. And eventually, we will see that going down to the corporate bonds, starting with the public sector undertakings and then going down the curve. But is this change imminent? We believe this change is imminent.
Well, you've got a number of online bond platforms emerging in India now. This is really sort of democratizing the investor base to a degree. What's your view on this? How is this deepening the corporate bond market?
I think this is first and one of the most important strategic movements done by our regulator, that is Securities Exchange Board of India. There are proper guidelines and regulations to be operating an online bond platform. It is governed by regulations and it is governed by our regulator. This gives us access to investors, apart from the institutional investors, to be investing into the fixed income asset. Today, fixed income asset has become a cornerstone of every financial portfolio. If we go on to the global footprint, we will see that you see bonds and NCDs appearing in most of the portfolios. This accessibility has given an investor an independence to make the investment within 5 minutes and be in control of their own portfolio. So this innovation and this support from the regulator has completely democratized, and I would say is a birthstone for the retailization of bond market.
So how much interest are you seeing from individual investors, and what sort of risks do they have to be aware of?
Okay. I would put it this way: the risk in a bond market remains common, whether it's an individual investor or an institutional investor. However, institutional investor is expected to be a lot more literate and lot more read and educated. All these bond platforms are putting in effort to educate the investor, spread the awareness for them to understand what the risk associated with fixed income investment is, which could be credit risk, liquidity risk, interest rate risk, to name the few. So there are steps being taken and there are proper guidelines how the disclosures needs to be made on these platforms for people to be aware before making the investments. However, we are seeing a lot of interest and inquisitiveness for people to learn. If you've seen the equity markets in India, the tech revolution which gave the birth and was the reason for the robust Indian equity markets, is what is expected to happen in the Indian bond market. Also, an Indian bond market and revolutionization by investments coming from non-individual investors can be supported by the tech revolution that we are seeing.
We've also seen a widening in spreads between government and corporate bonds, and this is a trend you expect to continue. Can you help us understand why?
So we've been seeing the spread between the corporate bond and G-Secs to be widening for a reason that G-Sec has got included in the FAR, and we are seeing a continuous inflows coming in from the FPIs. And eventually, it will happen the same in the corporate bonds also. Corporate bond today, as an economy, and like every other global economy, there has been a volatility in the interest rates. So corporate bonds have been following the same trajectory. So hence, there has been I would say significant spread between the corporate bonds and the G-Sec. Hopefully, when we'll start seeing the more money coming in from the FPIs in the corporate bonds and more predictability and the stability in the interest rate scenario, we will see that spread to be contracting.
All right, Aditi Mittal, the co-founder and director of India Bonds. Thanks so much for joining us. Now, let's stay with the India Bonds inclusion. Foreign buyers who are keen to race into this market do risk being tripped up by red tape. Let's get some more from our Asia EM Forex and Rates reporter, Ronojoy Mazumdar. Ronojoy, how hard is it for investors to get involved in this market? What sort of hurdles are there in terms of bureaucracy?
Good morning. So it's actually quite tough for a new investor to start participating, a new foreign investor to start participating in India's bond market. The hurdles are there in terms of documentation, in terms of taxation, which can vary a lot depending on the jurisdiction. And the whole process can easily take a couple of months in order to register.
It was my understanding part of the reason for Narendra Modi's popularity, both at home and abroad, is he gets rid of red tape. Can you see this set of circumstances changing? Can things possibly be getting easier for investors, or is this just going to be the way it is for a while?
So it is on the radar for regulators that foreign investors are taking a much bigger interest in the bond market here. And what that means is that you have a whole new cohort of investors that are starting to come in. Because, of course, this is not as much of an issue for existing investors, some of the bigger names that have been in India participating for many years. It's a bigger problem for those coming here for the first time. So it is on the radar for the regulator, and it is kind of being looked at, but there aren't expectations for any major kind of shifts anytime soon.
All right, Asia EM Forex and Rates reporter Ronojoy Mazumdar there. And another story that we're following in India, an Indian government investigation is said to have found lapses in the corporate governance of Byju's, but cleared the online education startup of financial fraud. Sources say that inspectors also found no evidence of accounting malpractice. India's Ministry of Corporate Affairs denies the firm has been cleared of financial fraud. It says proceedings are ongoing. All right, let's check in on how Indian markets are faring at the moment. Kind of a flat to slightly weaker picture at the moment. We've got the Sensex just off by a few points, down by 0.1%. We did see India Cements, I mentioned earlier, gaining 10% as Ultratech makes a move to buy a stake. But otherwise, looking like a fairly quiet day on Indian markets at the moment. We will have plenty more ahead. This is Bloomberg. The latest episode of Latitude with Haslinda Amin focuses on the world of golf. Live Golf CEO Greg Norman speaks with Haslinda about competing with the established PGA Tour and his strategy to reach newer, younger fans.
How do we reach down to the 18 to 35-year-old market? How do we bring these kids, these influencers, this new generation of people interested in the game of golf. There's 738 million people in the world who are interested in the game of golf. Don't play the game of golf, but interested. There's about 60 million golfers. So we have another 670 odd million people we can go figure out how to get them interested, not just in live, but in the game of golf. And so we sit down and you talk about this internally with your production team, you talk about with your marketing people. I truly believe we are on the road to doing that already, because when you look at our audience base today, that we have like about just around 50% of our ticket sales are 45 years and old and younger. Following the PGA Tour, it's the oldest aging demographic in sport. It's 67 and a half. So in a matter of a year and a half, basically, we've pulled that 67 and a half down to 45 because of our product, because of the entertainment side. There are places around the world where 32% of our ticket sales are women. So they're coming to an event that they feel inclusive with. Right? So all of a sudden, we're seeing these data points coming out going, my gosh, we're owning this space.
And you can catch the full episode of Latitude premiering today. That's at 8 p.m. Hong Kong on Bloomberg TV. Now to some top global stories that we're tracking today. Bolivian President Luis Arce has sworn in a new army commander after troops led by the general's predecessor stormed the presidential palace in an attempted coup. Hours earlier, Bolivian troops crashed a tank into the palace in a bid to overturn Arce's socialist government. His administration has struggled with an economic crisis amid dwindling natural gas exports, a shortage of dollars, and a currency peg that has effectively collapsed. Julian Assange has landed in Australia for the first time in more than a decade after his guilty plea in a US court allowed him to return as a free man. Assange touched down in Canberra after flying from the Northern Mariana Islands, hugging his wife and father after landing. He ended a 14-year legal saga by pleading guilty to US charges of unlawfully obtaining and disclosing classified documents. The European Union is said to be slightly revising its proposed tariffs on Chinese EVs after receiving more information from affected companies. Sources say the new provisional rates will come on top of the existing 10% duty. Companies that did not cooperate with the EU investigation will face an extra 37% levy. Provisional tariffs are set to be introduced on the 4th of July. And we have an important interview coming up later on Bloomberg Television. US Ambassador to China, Nicholas Burns, going to be joining us live from our Shanghai studio. And we'll be talking about tensions in the South China Sea, the Russian defense pact with North Korea, and of course, trade and tariffs. That conversation at 2:15 p.m. Hong Kong time. That's it from Bloomberg Markets Asia. This is Bloomberg.